All LLCs must file tax returns, even those with zero income or activity. Understanding what documents you need and when to file can save you from costly penalties and help maintain your business's good standing. The documents you need for filing LLC taxes depend primarily on how your LLC is classified for tax purposes. LLCs offer flexibility in taxation, allowing you to choose whether to be taxed as a sole proprietorship, partnership, or corporation. For all LLCs, you'll need some general documentation. This includes your Employer Identification Number, or EIN, especially for multi-member LLCs or those with employees. While not required for taxes, your operating agreement can be useful if ownership questions arise. Prior year tax returns help track deductions and ensure continuity in your filings. You'll also need financial statements, including profit and loss statements, balance sheets, and bank account summaries. Keep all receipts and invoices to document business expenses and income. If you have employees, maintain payroll records of wages paid and employment tax filings. And don't forget a business mileage log if you're claiming vehicle-related deductions. The specific tax forms you'll need vary based on your LLC classification. For a single-member LLC, which is considered a disregarded entity by the IRS, you'll file Schedule C for profit or loss from business, attached to your personal Form 1040. You may also need Schedule SE for self-employment tax. Multi-member LLCs typically file Form 1065, which is the U.S. return of partnership income, along with Schedule K1 forms for each member. If your LLC is taxed as a corporation, you'll need Form 1120 for C corporations or 1120S for S corporations. You'll also need W-2 forms, W-3 forms, and Forms 940 and 941 for payroll reporting. An LLC with one owner is automatically disregarded for federal income tax purposes, meaning the single member reports income and expenses on their personal tax return. LLCs with multiple owners are recognized as partnerships by the IRS, requiring an informational partnership tax return, while members report their share of income and expenses on personal returns. You can elect to have your LLC taxed as a corporation by filing Form 8832 with the IRS. This can be beneficial if your LLC retains significant profits within the business, as these retained earnings would be taxed at corporate rates rather than passing through to your personal return. However, be aware that if you convert to a corporation, you'll be ineligible to convert back to pass-through taxation for 5 years. Your filing deadlines depend on your tax classification. Single-member LLCs file with individual returns due April 15th or the next business day. Multi-member LLCs must file Form 1065 by March 15th. S corporations file Form 1120S by March 15th, while C corporations file Form 1120 by April 15th. Extensions can be requested using Form 7004, but estimated taxes may still be due by the original deadline. There are several reasons why some LLC owners choose to file separate tax returns. For multi-member LLCs, separate returns are required. Some owners find it more professional, and lenders may request separate returns when applying for business loans. Filing separately might impact eligibility for state financial aid. Separate filing can also provide asset protection, which is one of the most common reasons for forming an LLC. Additionally, personal tax returns face a higher risk of IRS audit than corporation or partnership returns. Failing to file your LLC tax return can result in serious consequences. Penalties for late filing of Form 1065 can reach $220 per member per month, up to 12 months. For Schedule C filers, individual late filing penalties apply. You'll also face interest on unpaid taxes and potential audit triggers due to incomplete records. Corporation elections can be revoked if filings are late or incorrect. Most seriously, your LLC could lose its limited liability protection if dissolved by the state for non-compliance. Even if your LLC had no income, you typically must still file a return to maintain good standing and avoid penalties. While you can file LLC taxes yourself using tax software, complex situations often benefit from professional help. Many states require additional filings beyond federal returns, such as income tax returns, franchise tax reports, or annual filings. Understanding your LLC tax obligations and keeping organized records will help ensure compliance and maximize your business tax benefits. Planning ahead for filing deadlines and consulting with tax professionals when needed can save you significant stress and potential penalties.